how's it going? Hope you're having an awesome day. And I've been looking forward to making this video for a long time now. And that is because in this video, I'm going to go through my entire $8,000 Robinhood portfolio. I'm going to go over the stocks I own. I don't own too many, but I do own a few that I am very happy with and pretty confident in. I'm going to go through each one, give a little brief explanation to why it is that I own it. We're going to go through exactly how much money I've made, how much money I've lost, and just give you an overview of exactly what my Robinhood portfolio is looking like. Now, as you saw in the title, it does say $8,000, and you may be looking behind me saying, hey, that's $5,771. That's not $8,000. What are you talking about? Well, if you go to account and then if you go to account again, you will see that my total value is well over $8,000, almost $9,000. The reason it's $5,000 something on that front page is just because I have just over $3,000 in Robinhood Gold, and Robinhood Gold unfortunately isn't added in that value on the front page. But I do have over $8,000 invested in the stock market, and that is what we're going to be going through. So I am about to head to the corner of your screen. We are going to jump into my Robinhood portfolio, and we're just going to see what it is that I am invested in. So let's get to it. And if you're new here, hello, my name is Calvin Rabb. I make videos all about personal finance, so if you're interested in anything like that, I would love it if you would subscribe. Alright, so here we are. We made it to my portfolio. If you see me looking down, that's just because my computer's down here, and I gotta look down to show you guys what we're looking at here. But let's jump into it. And I want to start with kind of the biggest stock I own by far, and it takes up the largest percentage of my Robinhood account, and that is Amazon. So let's head inside. Amazon takes up a large percentage of my Robinhood portfolio. As you can see here, it takes up almost 67%, about 2/3 of my entire portfolio. And I own 3 shares of Robinhood, averaging $1,611. And here's the cool thing. As you can see right here, my total return is 20% with Amazon. So Amazon has made me a good amount of money in context to my entire portfolio here. And the reason is because I bought at a very good price. Back last year when the market had that correction and everyone thought the sky was falling, I decided to buy some more. So on December 24th, just a few months ago, I was able to buy at $1,381, and it was able to then skyrocket back up. And as far as why I'm into Amazon, I don't think it needs too much of an explanation. I think just the dominance of the company can kind of speak for itself, and the money they generate can also speak for itself. But I just thought of it as how many times I give them money. And I give them money, of course, on the retail side, they're gonna make some money. I use AWS to host my websites. I go to Whole Foods. I use Amazon Drive, and I give them money there. And there's just so many different ways I'm giving them money. It's not just one particular niche that they're in. They're continually growing and expanding, taking over new markets. They did buy Whole Foods, and they are very customer focused. I wanna now jump from Amazon to my riskiest stock, which is TQQ. All right, so we made it to TQQ, and out of all of them, this is probably one of the stranger ones to kind of understand, but essentially all it is it is a 3 times leveraged ETF, which, to kind of translate that, means that this stock is an ETF that tracks a particular index, in this case the NASDAQ, and it is a 3 times leveraged version of it. So essentially when the NASDAQ goes up 1%, it's 3 times leverage, so it goes up 3%, which you're like, that's great. But then there's also the inverse. When NASDAQ goes down 1%, it then goes down 3%. So from the About section down here, you can see that it tracks 100 of the largest non-financial firms in the NASDAQ. So you want to buy this one when you think the economy is going to be booming. And as you can see, if you go to even the 5-year, the economy was doing really well here, and it really just skyrocketed. You can see that percentage way up here, 577%, and that's just the power of a 3 times leveraged stock. However, if the economy is going down, you can then flip that and be down a whole bunch of money. So that's why it is extremely risky. And because I do believe a recession is going to be coming up, I do plan on getting rid of some of these riskier leverage stocks because I had them when the economy was going up. I made decent money off of them. As you can see, my total return is 30%. So that means I am 30% year over year on this, and I just started really investing in Robinhood last year, kind of middle of last year. So I've done really well with it, but now that I think the economy is going to take a bit of a turn, I'm probably going to dump some of my TQQ. But don't worry guys, I'm going to keep you guys updated on any changes I have in my account. Okay, so from now moving from TQQ and the NASDAQ, I would now like to move to the S&P 500, which I am invested in through VOOG, V-O-O-O-G. So let's head over there. All right, so now to VOOG, and as you can see, I have a decent amount here. It makes up 12% of my portfolio. I'm up about 12%. And I have about $1,100 within this stock. And I think out of all my stocks, if I could only choose one, this would probably be the one that I would go with, because it just tracks the S&P 500 growth companies. Meaning, one, I do like being invested in the S&P 500. I think that is a pretty safe bet in the long term. Of course, it's cyclical, but in the long term, it'll pump you about 7% year over year on average. But also, it's also cool because it tracks the growth companies. So a company is going to look over it and see what it believes are going to be the growth companies within the S&P 500, and it puts those in an ETF. And this for me is definitely much more of a long-term hold, just because it's investing in the US economy and the risk is tied, of course, to the economy. Now we're moving from a kind of ETF version to a particular stock, which is Microsoft. I only have $500 in Microsoft, but it has returned me 21%. Microsoft has been actually one of my best stocks. If we look at the year version of it, around this time here, where was it? Yeah, this whole September, October, it stayed relatively flat right here. It did go down a little bit, but this is when everyone else was just kind of crashing down, and it didn't do that so much. It stayed relatively flat. It went down, but it didn't go down as much as the other ones. But Microsoft is just kind of a solid stock. I think their entire market value is like $900 billion. And then kind of on a side note, I've also listened to their CEO. His name is Satya Nadella, and he's a really, really interesting guy. I've listened to him speak a couple times on YouTube, and he's very well spoken and just a very interesting guy to hear from his perspectives. He just kind of seems like the kind of guy that if the world's falling down, he is just in a state of peace and he's very calm, and which is quite good when you are the CEO of a huge company. So I do recommend looking him up on YouTube and just listening to him talk a little bit, and I'd be interested to see what your guys' thoughts on Mr. Nadella. Alright, from one big company to another, we are now going from Microsoft to my next stock, which is Visa. Now, the reason I'm really into Visa is just because of the power and just total market they control. Visa is, I think, so much bigger than people understand. And someone that's into personal finance, I've been able to study just the size of their company. I mean, to put it in perspective, they have over 3.3 billion card users. They are in over 200 countries. And get this, they have a total spending volume of over $11 trillion. That is with a T. And it was just because Visa had this much market control, this much power, and just that much dominance over the industry that I wanted to invest in them. As you guys see here, it is not much of my portfolio. It is 1.87%. I only have one share. It has returned me over 22%, which is awesome. As you can see, they hit an all-time high the other day, and they've just been killing it. And they dropped a little bit here back when everyone was dropping, and they definitely bounced back. They've made me some good money. They've made about 30 bucks off of one share in the past since I bought it. When did I buy this? October 30th, and they also pay this little dividend to me. It's not much, but it's always nice to have. Alright, so that's from like the personal finance side of it. We are now going to move to my last stock, and this is actually the only stock that has lost me money, and that is UnitedHealth, UNH. Alright, so here we are. I don't have a ton in here. I have 2 shares, and it makes up 5.42% of my portfolio, about almost $500 in them. And as you can see, I have gone down 9%, and I've lost about $50. So they haven't done too well for me since I invested. We can go to kind of their 5-year and 1 year to give you guys an idea. Yep, you can see they've been dropping pretty steep kind of right here, and they are down on the year. But if you go to the 5-year, you can see that they have done pretty well for the past 5 years or so, and in context, they haven't dropped too too much. But as far as why I'm invested in them, I do talk about diversifying quite a bit, and I did want to get into the healthcare space, and I decided UNH for a couple of reasons. Firstly, they are huge. I believe on the Fortune 500 they are number 5, and people just don't realize how big of a company it is. I kind of have a hard time understanding how big they are. It's just crazy. They have their kind of hand in all these different cookie jars all over the place. But I did actually own, I do want to mention this, I own Johnson & Johnson. Let's go here. When I first got into healthcare, this was actually the first one I bought. And I bought it, so let's go to the 1 year here. Yeah, so I bought it back here and it was making me pretty good money and pretty good return. And then here, boom. Went from a very good performing company to just losing me quite a bit of money in just one day. And the reason for that big drop can be seen right here. Johnson & Johnson shares plunged 10% after report that company knew for decades about asbestos in baby powder. As you can see, that came out December 14th, 2018. So after that, stocks just went down. Luckily, I actually had a stop loss order on Johnson & Johnson, so I didn't lose quite as much as other people, and I was quite glad I had the stop loss order in place. And it was after that that I went and bought UnitedHealth, just because I didn't quite know how they were going to react from it, and it wasn't too big of a difference. In retrospect, I maybe should have just bought more when at its low, which I usually do, but I didn't know if there would be any other rules and regulations or different things I would be looking into that would hurt them for a while. I moved over to UNH, which I have lost some money, but I am in this for the long term, so I am not too worried. So things have gone me pretty well. I do plan on actually changing things up a little bit. I do see a recession coming up in our near future, and I'm starting to prepare my finances for that recession. Of course, I'll be bringing you guys along with that journey as I start to reorganize a little bit. But for right now, this is what my $8,000 portfolio is looking like. So let's stand back up and let's close out this video. All right, so I just wanted to jump back here and kind of close this out for you guys. I hope you guys enjoyed that. As you can see, I'm not really a day trader. I'm not really a swing trader either. I am in it for the long run. I do pay attention to the stock market, so some things may move around. If one of these stocks gives me signs that, hey, maybe it's not that great of a company anymore, then I will sell it and move on. I am not emotionally attached to these stocks. I just like their numbers and they just work for me, and I think they'll be good in the long run. And then as a heads up, I do plan on moving things around a little bit. I do think that we are due for an upcoming recession, and I am currently getting my finances ready to kind of weather the storm so I can do well in the recession. And as you guys know, I will be documenting exactly how I am changing up my finances to prepare for that upcoming recession, so be sure to look out for that video. But that is my Robinhood portfolio. That is how I have invested my money, and I just want to turn it to you guys. What do you think of my investments? Do you agree with them? Are there any where you're like, Calvin, I don't know if that's too good of an investment? Let me know in the comments below. A lot of you guys are in the stock market. You guys have different criteria and different things from me, so I would just like to know your guys' opinions and just have a good conversation. So let me know in the comments below. That will wrap it up. I hope you guys enjoyed that video. If you're new here, my name is Calvin Rabb, and I make videos all about personal finance. And my whole mission for this is to show that personal finance can be fun. And when you subscribe, you will find videos dropping every single Monday, Wednesday, and Friday, so be sure to look out for those. But other than that, that will wrap it up. I hope you guys have an amazing rest of your day. You guys are awesome, and let's just kill it in the markets, and let's just have a good time. So thank you guys so much for watching this video. If you made it all the way to the end, I like you. You're a trooper. Good job. But that will close it out. Thank you guys so much. Have an awesome rest of your day. And as always, my name is Calvin Rabb, and I'll see you soon. Bye, guys.